Test. My God. Don't know what the hell was going on before. Stupid echo. Always these stupid audio problems. Trying to see if price will come up to here. I'm already long, so I'll take some profits here. Let's go. Come on. I'm gonna try a long here on demo as well. Darn it. Okay, I guess I won't. Just chasing price.
The dates for the primary.
Or maybe I'll try a long here. Stop. Gonna be pretty tight. Actually, I'm gonna take some off already. If I'm fast enough, which I'm not. Oh, that didn't work out. Okay, did trading a glitch here or what? Taking some profit on my top step. Okay, I guess we're still in play here. Don't like this choppiness. Nope, that's not going well. Damn it. I'm gonna try long here. Now, looks like this isn't gonna work out either. Okay. Close the rest out on my top step trade as well. Okay, so let's just wait now. Oh yeah, coming down now. Didn't even check RTH. That was a mistake. Ah, so it would have not worked anyway today. Tempting to try long here, but I won't. Looks like it's gonna cut through here anyway. This might be an area here. Coming down strong. Oh, no pull. Let me add that pull, and then you guys vote if you're bullish or bearish. All right, vote. Well, this long might have worked. Yep, this might have worked. Actually, well, it would have worked. Damn it. I'll try a short. The hell? Price was here. Come on, let's go. I think I'm gonna take that. Oh, his bell is also too loud. He's... I mean, hello. Can I make this? It's not. Let's try this. Yeah, would have hit take profit here. I really want to try a long from here. But it's coming down pretty fast still, so I'll wait on that. I mean, below here or here, it's looks like it'll be coming down pretty fast. Wish I would have taken this short with 2 contracts. Then I would have been holding 1 runner. Okay, so let's see. I want to see it come down here and then maybe try another short somewhere around here. Good morning, crypto time. Let's see. Damn it. Missed this short. Might come all the way back up here. And I'll definitely try a short. Actually, and hello? The hell? Good morning, TradingView. Good morning, Juliana. Okay, creeping up slowly here. Would have liked to see this come up here and then retrace. Now it's retracing here. So then if it goes up again, it might get through here. volume imbalance here and here. The music on background is very nice. Glad to hear that. Okay, so I'm gonna have to take a quick bathroom break. I'm gonna leave this up here though, but have to put the stop loss. Actually, I should put it here. Okay, kind of like a 1-to-1. All right, I have to go real quick. All right, I'm back, and looks like everyone else is gone. The usual. So that's it. Now it's chop. Well, this is pretty lame. "26 minutes of some bigger moves, and now complete chop." Come on, bro.
private credit that they had to gate or prohibit. And that's in addition to BlackRock, that's in addition to Blue Owl. We're seeing private credit really kind of start to crack here. And that'll just kind of play into, in my opinion, a deflationary sort of growth shock that'll put, not only the US, but likely every major economy into a severe recession, which, by the way, would normally not be too bad, right? Like we tolerate some pain and it's kind of no big deal. They print money and we get out of it. The problem now is the developed economies like the US are so highly levered. There is so much debt in these major Western economies that a recession would act kind of functionally as a margin call on the debt. For example, if here in the US, if we go into a recession and we just kind of, typical average kind of recession, the deficit, the difference between what the government spends and what they collect in revenue, that deficit would go to $5 trillion, meaning $5 trillion would have to be issued in new debt each and every year.
Okay, so
and that's due to the fact that in a recession,
didn't want to come up
unemployed, right?
all the way here.
Capital gains tax goes away because assets are declining, right, on the revenue side. But then not only that, you have expenditures going
That
up.
sucks.
And those are called the automatic stabilizers. So it's really, really kind of precarious situation here. Now, if that were to occur, we know they will print an ungodly amount of money. So kind of to summarize or try to summarize, I think that the initial move here is, higher inflation, right? I think that's accurate. But I think that the American consumer is already so tapped out, so weak, that they won't be able to tolerate this really at all. And so I think maybe a month or two of higher inflation, and then I think we get a severe contraction or destruction of demand that'll plunge us into a recession. The government will then print an ungodly amount of money that'll probably be more than 2020. And in that environment, gold, Bitcoin, and stocks probably will do very well. But first, I think that there's quite a bit of pain ahead.
Robert, when you look at the speech of was it Ali Larijani? I can't remember who said the speech now, but they said that it was a representative of the IIGC. He said that their plan is to force oil prices up to $200. You mentioned that you're seeing, if things continue, a major global recession, which would be them trying to print $5 trillion. If oil prices were to go to $200, if you can explain in a micro and macro level, I know macro is your expertise, what would happen? You mentioned about the $5 trillion printing, but in addition to that, what will happen? And what will happen for the average consumer? What will happen to the average American? What would happen to the average Brit?
Yeah, so some economies are much worse off, right? U.S. would definitely be impacted by that for sure, but it would be way worse in Asia, South Korea, Japan. Those kind of countries would also be very bad for Europe. This is why British bond yields are up like 50 basis points, whereas here in the U.S. We're up much less, about 15, 20. That's why. So Europe and Asia would be absolutely decimated by that, by a $200 oil price. And funnily enough, obviously they run huge trade surplus or current account surplus with the US. The other way to say that is that they buy a ton of financial assets here in the US. So that kind of flywheel where we here in the US run very large trade deficits, that money then gets recycled, send it off to China. They recycle it into US treasuries, in the US stocks. This is true not just China, right, but any country that runs trade surplus with America. Well, that would go in reverse, right? Like we know that Japan, South Korea, Europe, very, very sensitive to oil and price shocks because they import so much of their energy. So their current account gets pressured. And again, you need to import energy, you need to import food and semiconductors and real stuff, commodities. You don't need to buy a ton of U.S. Treasuries, right? What takes priority there? It is funding your trade deficit, and so that could result in selling of U.S. Treasuries, and there's pretty major implications there. Also, the Gulf countries, have historically over the past year been a huge investor in a lot of the AI kind of trade here in America. Well, if they're not able to export anymore because there's an effective blockade, their refineries are getting hit, that kind of thing, that investment that they promised or they pledged into a lot of the AI stuff here in America goes away. And so there's some pretty major implications there that I haven't really heard many people talking about, but kind of very simply, it would cause very, very high inflation. Economies in Europe are already kind of on the brink of recession already. America a little better, but still not great, right? If you look at the personal savings rate, for example, it is near a record low. If you look at personal interest payments, the number of hours per year that the average American has to work, we've only hit this 105 hours of work. We've only hit that 2 other times, right before the dot-com recession and right before 2008. So the American consumer is already quite weak. Here in California, I was just out yesterday, a gallon of premium was $6 already. So, we probably here in California would see at $200 crude, we see $10, $11 oil, gas. And, you just can't afford it. You can't go on the vacation. You can't go to work. You can't afford it. And so everything just kind of grinds to a halt. I would argue right now that Iran, from an economic perspective, is winning. And, I'm an American. I love my country. I don't want to see it weak. But that's just my objective view here. I think it's really hard to argue that they're not winning, that they don't have massive economic leverage over not only the US, but kind of the global West in general. I mean, if they're able to keep this up for another couple weeks, I think that's game over.
What do you mean by game over, though? Like, what will happen to everyone? What will happen?
Gas will go to $10. Here in California, gas will go probably, I don't know, nationwide maybe 6, 7, 8, something like that. And you'll have hoarding, right? And so that'll cause shortages and even more demand to come in. And the government will try to print money to cap prices and short futures market. They'll try, right, to do all their kind of usual tricks. Probably won't work in my opinion. And so you'll have gas at call it $7, $8 a gallon, and people just can't afford to do anything. You can't afford to fly on that vacation, right? Jet fuel is going to be 3x, 4x what it was a week ago. Can't afford to do that. Can't afford to. Oh, and by the way, the airline profit margins would get hit, right? So airlines would have to lay off a bunch of employees, and so it's a recession kind of spiral that you can get into where demand, which is in America, GDP, right, gets talked about a lot. If you look at where all that GDP really is, about 2/3 of it comes from consumer spending. And so if consumers aren't spending, you're really relying on a bunch of AI investment to prop up your economy. And how is that AI investment going to do when, like I said, the Gulf countries will be their trade surpluses will be pressured, meaning that outbound capital into America will decrease. And everyone around the world, as we're seeing with private credit, is kind of rushing. There's kind of a very deflationary mindset where you're starting to see the stock market decline. You're starting to see the dollar start to kind of strengthen significantly. That is very kind of recessionary kind of phenomenon. Now bonds generally get bought ahead of a recession. We're not seeing that due to that temporary inflation concern. But game over. I mean, global recession, which again, that given the high debt load of the West, the developed countries, a recession would basically act as a margin call on these countries' national debt. and force them to print huge amounts of money. Like it'll be, I mean, just the fiscal deficit would go to 5 trillion per year of new debt that would have to be issued. Well, obviously, there's not that much demand. And so the Fed will have to come in, print money to buy some of that 5 trillion for the government deficit. But you would also have private credit blowing up. And private credit, once you consider kind of really all the entire implication of private credit, all the cross collateralization and that kind of thing, you're talking another 5 trillion there. The mortgage market, 12 trillion. So there would be a huge amount of money. Like, I mean, it would really be huge. We already right now spend $3.5 billion per day on interest. And with yields moving higher, that is going to also pressure the deficit. Now, yields would probably decline, we would hope, in a recession. So that 1.2 trillion of interest per year, hopefully, would decline. But just as a warning, something that we have seen with emerging markets that are going through a debt fiscal sort of crisis, we see bond yields actually go up in a fiscal crisis, which that's a debt doom loop. Now, I think it's a possibility here in America. I don't think it's probably, the probability is above 50%, but it is a probability here in America that we actually see bond yields go higher in a recession, meaning that that 5 trillion actually might be 6, might be 7, right? And you're talking an ungodly amount of money then that would need to be printed. So, I know it's kind of complicated, but I think the first move here with $200 oil, definitely higher inflation, definitely. Like we could see, 4%, 5% here in America, but then, call it back out into July